Wow, what a day. What a squeeze this afternoon. But the trading gods, they must have been listening last night because we got that beautiful range we talked about last night and that bear trap at the end of the morning, squeezing all the sellers. And now we have another big move higher tonight, which means tomorrow the game plan's pretty easy. There's two really easy ways to make money on Friday. Believe it or not, we got more big news coming tomorrow. I have a number of pretty easy trades. The roadmap's pretty easy for tomorrow. By the time we're done tonight, you'll have an easy roadmap to make some more green, some more money on Friday as well. We have a lot to cover in another video tonight. Before we jump in though, and talk my favorite trades here for tomorrow, make sure you subscribe to the channel. By now, hopefully by now, hit that subscribe button. I don't want you to miss tomorrow night's video. If you guys like these lessons, if you enjoy these videos, do me a favor here tonight. Hit that like button for me. Give me a shout out. Give me a hell yeah in the comment section. Thank you so much for sticking around tonight. Oh, we're not done yet. It's been a fantastic last couple days. But where are the best trades setting up for tomorrow? We're only as good as our next trading day. Charts are all ready. Nasdaq triple Qs are ready. Emini and the SPY is ready. Everything's still pretty bullish. Boy, the S&P, the buyers held off the low of that channel we talked about in last night's video. Bears got trapped, sellers got squeezed, and now we got this big move higher, which if you guys watch these videos, you know that means the game plan is pretty simple for tomorrow. We'll talk about that a whole lot more in the video tonight. Over on the Nasdaq, we talked about this last night, bullish into a trading range. We know that ranges act like magnets. We know ranges love to rotate, and we assume right now the buyers are trying to continue that rotation going higher. There's a little bit of overhead resistance coming down on the Nasdaq. We'll talk about that in a moment here once we dive into our tick charts, because the 60-minute time frames are pretty straightforward. The most important clues, though, are always on the tick charts. We'll drill down to some tick charts and talk entry tactics here in a moment. Before we get our hands dirty, though, on the actual entry tactics I'm looking for tomorrow, let's double check our schedule. Tomorrow's a Friday. There are three things on my mind right now. The first one, of course, is the reaction overnight. We heard from Apple, we heard from Meta, we heard from Amazon. It sounds like all three of those came out pretty good. We'll see how the market thinks overnight. So the reaction to that coming out here in Asia. Tomorrow, though, the employment number, like I mentioned earlier, we've got another big news event. Believe it or not, what a crazy, crazy week between earnings and FOMC, and we're going to finish up tomorrow with what would normally be the biggest news of the week, the employment number tomorrow at 8:30 Eastern time. Now, please remember, right, we don't trade the news. We trade the reaction to the news. So just be aware that number will come out tomorrow morning. It'll whip around pretty good around 8:30. We'll trade the reaction to that tomorrow after that news comes out. And then also one of the most important things, the three things for tomorrow is a Friday. And remember the mindset. What's the mindset on a Friday? Well, first of all, Fridays get illiquid as the day gets older. So as we go into Friday afternoon, the markets, there aren't many people trading. People who are trading are making poor decisions. Markets get illiquid. They love to make these big runs on Friday. So my mindset on a Friday morning is always get in early when I'm at my best and the markets are at their best. Remove risk, take some profit, but try to hold those runners. If there's one thing you have to know about Fridays, in the afternoons, they get illiquid and they love to run. So early in, remove risk, take a bit of profit, but I always try to leave a little piece of that position open on Friday because Fridays, they love to run. So we'll see how the reaction goes for the big earnings overnight. Be careful around the employment number tomorrow. And remember, bad news is good news right now. Bad news is good news. Whenever the Fed's involved, bad news is good news. And again, Friday mindset, right? Friday mindset. Early in, get rid of risk. Early in when you're at your best, the market's their best, and let those suckers run. Now back to our charts though, because hopefully by now you know the money is made on the charts. Let's now cover my favorite trades here for tomorrow. Again, we're still bullish, obviously, on the 60-minute. We talked about this a lot last night, popped up right into that channel. And we talked about how we were expecting these bears to give this a couple shots going lower. They were unsuccessful and got squeezed running higher. The size, right? The size of that move is such an important clue. It makes our job pretty easy here for tomorrow. Let's now drill down to our tick charts. We trade tick charts, of course, in our trade. We don't trade off time charts or 60-minute charts. I think tick charts make everything easier. This is a 7,000 tick chart in the upper left-hand corner. And if you're watching for the first time right now, welcome aboard. This is the 21 EMA in case you're tuning in for the first time. There's one very, very important clue right now on this tick chart, and it's the big move higher. Anytime we see a big move in one direction, there are two very simple ways to trade and make money the following day. Let's go over one of them right now on the S&P. And if you learned one thing last night on the video last night, I will give you a reason to stick around all the way to the end. We'll cover the second scenario in the second half of this video, make the move over the Nasdaq. If you stuck around last night, if you watched all the way to the end, you got paid for sticking around last night, or hopefully you did. We'll talk about that as we go deeper. So let's talk about that first way, right? There's two ways to trade a big move higher. The first way, very easy. It's a two-legged pullback and a retest of that high. Two-legged pullback and a retest of that high. Let's break this down because there are a number of different ways. A two-legged pullback is a very broad way of describing it. There are a lot of different entry tactics we use within that two-legged pullback. So let's talk about, break it down. That way you have a roadmap and you know what to look for tomorrow if you're not trading with us in the trade room. Now, when I say two-legged pullback, what you want to do is you want to get underneath the moving average. In my free video classes, I talk about what are called measured moves, or 100% extensions, right? So imagine a measured move. And the key to a good two-legged pullback is you want to go a little bit more than 100%. All right. Unfortunately, I don't know exactly what the pullback will look like right now. What I do know, though, is once I get underneath that 21 moving average, again, think about a measured move, one leg, two leg, and you want to get a little bit further. Usually it goes a little bit more than a measured move. Once we get that deep pullback, remember, it's very difficult to pick the bottom of this move. For all I know, it'll keep on going. So I'm not in the business of picking bottoms on this. What I like to do is once we get that two-legged pullback, just start waiting now and get these bears to come in and see if they'll take the bait. See if they'll come in and try to short a couple times. I do this because I want to use their stops to fuel this move going back up to retest the high. Again, it's a huge move going higher. We don't think a lot of buyers are going to want to buy high up there. They may, and we'll talk about if it keeps going higher in a moment. But most of the time, when you see a big move like this, we're looking for that nice deep pullback to allow buyers to buy nice and low, right? Buy the dip, buy nice and low. The hard part, though, is, again, it's difficult to pick the bottom. Sometimes it keeps on going, and it may do that tomorrow. I don't have a crystal ball. What I do know, though, is once those bears come in and they start shorting this thing on that pullback, it's that strong run up. They're going to want to go back and retest the high. Think about where their stops are and buy right into those stops. Now, we talked about this a lot last night, but these things love to squeeze, right? They love to squeeze and run higher. And what you want to do is after it pops up, you don't want to chase after it. You want to look for what's called a bear trap going right back overhead. Now, these are pretty simple. It's a higher high in price and a trap below that low. Look over here. See how the bears come in? They try once, they try twice, right? They get squeezed running higher. Okay, then look over here. They go up, that higher high in price, that lower low right there. There's that bear trap right there, right? So that similar pattern is right there. Well, that's what we're looking for there for tomorrow. That is the essence of a two-legged pullback. Get a little bit more than a measured move. Don't pick the bottom. Trap the bears in. Use our stops to fuel the move, and then as we're running back up to retest the high, we don't chase it. It's a higher high in price and that bear trap. Now, let's talk about a couple variations of this, because there's always going to be some variations of these. For example, a lot of times we see that two-legged pullback. It's so strong, we get the entry on it. We get the one, we get the two, we get the entry on it, we get our first target, but it holds. It holds the underbelly of that move and comes back down for another bite at the apple. Again, in these cases, we'll get our first profit target, we'll get the risk of a trade, and we'll get stopped out at point of entry. It goes back and retests the low. Now, that is not a reversal, It's too bullish of a market right now. At this point now, think about the situation. If all the sellers who sold short right there, where are they taking their profit? Probably back at that low. Is it safe to say the sellers turn into buyers at that low? All right. Is it safe to say that buyers are probably going to want to buy that low as well because we're in an overall bull market? I think so. So now, as we come back down again, remember, this could easily keep going lower. I don't know how far that will go. What I do know, though, is once they take out that low, keep an eye out for some rookies. If they try once, they try twice, we can do it all again. That 2-try failure pattern, what we call these failure patterns in our free video classes. And then what's the game plan? If it squeezes running higher, what do? You don't chase it. You go out, you find that higher high in price, right? That higher high in price, you look left and you get right underneath that little swing low, and that's going to be that bear trap, okay? We call these double bottom retests. Buy the double bottom retest. Again, we might get that failure pop up. They may short that underbelly right there. They come back, they retest the low. It's still an overall bull market. Keep running those stops. Keep trapping those bears below the 21 EMA with failure patterns, and grab those bear trap patterns on the way back up to retest that high. Now, if you're watching for the first time right now, this might be way over your head right now. I know that most of you guys know this stuff already, but if you're here for the first time and you want to learn more about failures and traps, and most importantly, how we use the moving average to trap traders on the wrong side of the market, don't you worry. I teach all of this, and I have hundreds of examples of these pattern setups, including our free video classes. I'll put a link up top there for you. Upper right-hand corner, grab that link and take that free video course. I'll tell you, the strategy you're going to learn in that short video series will teach you a simple trick we use in our members trade room to know exactly where the best winning trades are going to be each day. Then once we know where the best trades will be, we use 4 simple entry patterns to time the perfect entry. It is so easy to learn if you're not making consistent money right now, if you're tired of missing the best trades each day. Hit that link up top there. Take that free course. It'll give you a simple roadmap to follow. It's perfect for someone trying to make the jump into full-time trading. And also be aware too, if you can't get that link up top there, I'll put all the important links tonight in the description of the YouTube video. I'll put my free class links down there. We trade together every morning at 8 o'clock Eastern time. I'll put our trade room membership links in the description. And also, too, I'm on Twitter. I always post on Twitter during the day, charts and stuff throughout the day. If you're on Twitter, I'll put my handle in there. Give me a follow, and I'll see you on X during the day for tomorrow. So now we know a couple different variations of this. I've got 2 more things I want to talk about, and then we'll talk about that second way to make money tomorrow as we go over to the NASDAQ. How about this? Sometimes we get these really nice deep pullbacks, and again, I'd like to get that 2-legged pullback, trap the bears in, and go back higher again. That's my favorite way to do it. But sometimes there are so many buyers down here because everybody wants to buy the dip, it just rips, right? Just rips and runs back higher, and I don't get the entry. How do you trade a V bottom? A V bottom. These are the most difficult ones to trade, but you know what? We got to make sure we're ready for it, right? I don't know what tomorrow will bring, but I do know though, if we get that nice deep 2-legged pullback, but we don't get that bear trap failure, right? If it just pops up and begins to grinds, whenever it pops, right, and grinds, what do? You draw a trend line off the highs, you bring it down off that low, and always look left and grab that first test off of that channel. I had a number of students this morning who traded like this, right? Pop up, find that high, bring it off that low, right? Find that prior swing right there, and don't miss that first test. Think about that type of pattern right there. I call these V bottoms, right? V bottom reversals. They're not my favorite. Again, I would rather buy nice and low on that, but hey, we take whatever the market gives us. And remember, this could be a bear trap, like I'm showing you here, right? It could be a failure pattern, a pullback combination pattern. That will make a lot more sense, of course, as far as the entry patterns once you get into the free video course. All right, so that's a V bottom reversal. Last but not least here, what if this thing keeps going? You know, what if it keeps going? I mean, it seems like we've shrugged off the Fed stuff yesterday. We got big news tomorrow. What if this thing keeps on grinding? What if we keep on going higher? What do you think is the game plan for this? I'll bet you know the answer to this already. We don't chase it, that's for sure. We're too high up right now to be a buyer. I'm going to draw a trend line off that high. I'm going to connect it down off that low. And what do? We look left. We find prior swings. Hopefully, it will give us something like this, where it'll pop down, kind of grind like that. These are easy. Trend line off the highs. Trend line off that low. Again, look left. Find those prior swings. That's usually where the best entries are going to be. Now, wait for that pullback. Okay, once it pulls back, do not let this sharp pullback fool you. All right, it's not a reversal. It will not be a reversal until they hold the pullback and jump. That's when it turns into a reversal. Most of the time, in a bull market like this, that grinds up like this, they'll get underneath the moving average. The bears will come in. They'll try to sell it short, but it's a bull market overall. This is usually a bear trap, and we can run underneath that moving average, trap those bears in. A failure into a pullback combination. And one cool thing about pop and grinds is that the pop leg, before we grind, that is the measuring leg. So the amount that we pop up can then be pinned at that low, and that becomes our big target, right? Again, think about measured moves. The size of that pop leg is the measuring leg, right? We pin it at that low. That will tell you how far, right, we want to let that trade run. Again, tomorrow's a Friday, so you want to try, right? You want to try to hold on to a little piece of that trade. And again, boy, I just can't resist. What a fun session we had today. We talked about last night, if it goes sideways, right? That beautiful pendulum into that gorgeous bear trap. Man, oh man, lots of folks making money on that today. I did not know it would keep on going forever. I don't think anybody knew it would keep going forever. But man, oh man, if you stuck around last night, you definitely got paid for putting the effort in. Hopefully got paid. Let's keep going though. Let's keep going, right? S&P is all good to go on that. Let's get some NASDAQ going. NASDAQ's getting a bit lonely over here. The NASDAQ is similar to the S&P, but as you can see, a little bit different. Again, like I said in the introduction, it's a bull market up into a trading range. Ranges act like magnets. And let me talk about a lot in our free video classes, the amount above, right, the amount below. We hit that, of course, last night. We knew the bears would fight because they had all that momentum on their side. Amazing, though, how they fought and squeezed back up. Now we think, we get the pendulum swing off the low. Now we know the buyers have one thing on their mind. They want to go back and take out these highs, right? Strong run up. They want to take out those highs, and they want to ultimately now take out that pendulum swing up around that 887 level up overhead. The only challenge we have right now is this trend line coming down, right? That trend line coming down. So let's talk about that a bit here on the NASDAQ. The NASDAQ is almost identical to the S&P. That bear trap set up right as we took the S&P one this morning, right? So it was like, had to choose which one. But again, if you stuck around last night and watched that video last night, remember last night on the video, we talked about how sometimes in a bullish overall market, there'll be that bear trap below that low, and it will just light the whole thing on fire. But that's exactly what happened today, right? What a gorgeous, and again, if you stick around last night, I got a bunch of emails from folks making bank on that today. So well done on that. Now, big move higher. We talked earlier about the first scenario, right? The first scenario, that two-legged pullback and that retest of the high. We talked about two-legged pullbacks. We talked about double bottoms. We talked about V bottoms, right? We talked about if it keeps going higher, all right? So everything we just talked about on the S&P can pretty much be overlaid on the NASDAQ. Now, let's see if you were paying attention in last night's video, or if you missed last night's video. Let's talk about that second game plan, that second way to trade, which, as I mentioned last night, it's always my favorite, and that, of course, is a range market. Whenever we see a big move in one direction, we oftentimes see one of two scenarios, either a two-legged pullback and a retest of that high, or the market simply starts to tread water. We got big news coming tomorrow, right? Non-farm payrolls at 8:30 tomorrow. It's made a huge move higher. Again, we could easily keep on going higher here overnight. I have no crystal ball. What I do know, though, is that after a big move, you better be looking for a trading range like we saw this morning on both the Nasdaq and the S&P. Now, what do you do with a range? Here's the first thing. The range itself is a magnet, all right? The range itself is a magnet, and ranges like to rotate. So the amount that we go above the range can be projected the amount we go below the range, right? Like here, above the range, below the range, that will tell you where to find the entry patterns. Again, right? They love to rotate. They rotate back and forth like a pendulum, as we say. Okay, that's one kind of key fundamental of a range market. The second thing is you want to look left and find previous levels of support. It's a bull market overall, and my goal is to wait for a breakout. Ideally, get underneath that range because, again, we're overall bullish. Wait for a breakout. Now, remember, I don't know how far this breakout will go. Nobody does. Nobody does. There's no special indicator that tells me how far that thing will go. I'm not going to try to pick the bottom. Like back here, right? It looked like that thing was going to keep on going, didn't it? But it didn't. And what happened? Once it pulled back to the moving average, the bears tried, and they got squeezed, right? Their face got ripped off that bottom, and that trap ended up squeezing everything, leading it going higher here. The same idea over here. Now, get underneath that range, get into a support level. Now, in the free video course, I talk about triangles, about pendulum swings, right? So you'll learn more techniques to find levels of support in that free video course. But again, get underneath that moving average, get those bears trapped in, right? And use their stops to fuel that move going higher. Again, it may keep going lower. I don't know, right? I don't know. What I do know, though, is even if this thing really shoots going lower, right? I don't care. It's such a bull market overall, that range will be a magnet. Once we do end up pulling back to that moving average, now again, bears once, bears twice. Use that failure pattern to squeeze those stops. And then remind me again, what's the game plan as it squeezes, right? As it squeezes, what's the game plan? Do we chase it? We never chase the market. We should know that by now, right? I know it's easy to say, not easy to do. But as it's going higher, what do? You look for this pattern right there, right? That's the pattern. What is it? It's a higher high in price and a trap below that low, right? The higher high in price and the trap below that low. Again, it's a two-try failure, right, off that low. And again, as we go higher high in price, trap below that low, higher high in price, trap below that low. Now, the good thing about ranges is that we know exactly where they want to go. They want to go back to the other side of that range. And then remember, overall bull market, measure the amount below the range. Okay, project that now above the range. I'm running out of space up here, and that becomes your next objective. Remember, it's a Friday afternoon, right? So leave that runner, right? Leave that runner. So a failure pattern below the low into a bear trap, higher high in price, right? That bear trap as we make our way back up. Remember, think about that pendulum swing, all right, as we go. Okay, now where things get a little more complicated is what we saw here today. Right? We saw it today. So here's another scenario you want to keep in mind, right? A lot of times what happens is they throw us a curveball. And guys, I don't know where the range will be. All right? This range could easily be higher. I don't know where it will be. But the minute it goes sideways, you'll now know how to trade this thing. So once we go sideways, if we go sideways tomorrow, watch out for this one. Okay? Oftentimes, it will jump higher and then rip right back down again. It's basically a fake out breakout. It's a head fake. All right? Now, how could I sell that? Could I sell that breakout higher? Could I sell it? You can, but remember, we're overall bullish, which means the odds are not as good as buying underneath it. So I have to make sure I'm very careful on this. To sell something like this, I need to get what's called a crown reversal. All right, it's very simple. Buyers once to go higher, lower low, buyers twice to go higher, and a bull trap off of that high. Okay, make sure you understand how this pattern works. All right, make sure you know how the pattern works. Again, it's a lower low in price, all right, and a trap high above that high. And you guys will learn about trap entries, the signal candles to use in the free video course. All right, that's the way you sell it in an overall bull market. Now remember, warning, this is a counter trend trade. So in my world, this is a half size position. Right? If I normally trade 8 contracts, I'm trading 4, maybe only 2, right? Okay? For some of you guys, if you're brand new to this stuff, it could be 0. right? Counter trend trades are not for everybody. Okay, they're a little bit higher stress. They're not going to be as consistent, right? So if I'm a new trader, right, I'm skipping those reversals, right? I'm waiting for the good stuff down below. Okay. Now, again, right, just be careful with that, right? Against a trend, go half size, go quarter size, maybe go no size until you're consistently profitable going with the trend. Now, the amount we go above is the amount we go below. Okay, this is usually with a magic cup. What magic happens? Try to find that pendulum, line it up with other levels of support back here. Remember, when it runs off that low like this, when it runs off the high of that trading range, it's going to feel very convincing. All right, I'm telling you right now, that dump off the high, it will feel like it's never going to stop. Okay, the most important thing is go back and watch this video. Remember, we're not a bear market. We're an overall bull market. This is probably nothing more than one big bear trap, right? It may keep going lower, but odds are it's not going to keep going lower. What will happen is we'll run down, right? The bears will try to short this thing a couple times, right? They don't watch these videos. They haven't learned this lesson yet. Right there. Right there. You can see it, right? They go up, they shoot lower, the bears get short, they're trying, and they squeeze, right? That's exactly what we want to look for, squeeze back up again. And then as always, right, as we make that run going higher, we look for that what? You got it, right? That higher high in price and that trap below that low, right? Once we squeeze bears, what happens, right? It runs up, it pops up, higher high in price, and everybody wants that trap. Everybody wants that trap. Why? Why does everyone want that trap? Because now the gig is up, right? Now everybody knows what's up. Now they know the bears have failed. Now the buyers are trying to get in as low as they can, right? Right over here, right? Same thing right there. Higher high in price, trap below that low. These are everywhere. They're everywhere. Once you learn how to trade traps, you're going to start seeing them in your sleep at night like I do, unfortunately. Anyways, that's how you trade a range-bound market. All right, guys? Again, please be careful with the shorts off the high. A lot of times you'll get ranges, right? It'll run low, right? Pop up and just keep on going, right? Just like that one did, right? Bear trap and just keeps on going. So be careful, shorten that top, leave that runner, right? Leave that runner in that scenario. And I'll tell you, I'm getting goosebumps just thinking about trading for tomorrow. All right, guys? Now the game plan is ready. The two scenarios, the two-legged pullbacks, the double bottom retest, the V-bottoms, right? The trading ranges. I know it's a lot to learn. And the markets love to throw curveballs at us overnight. But that's okay, though, because we get together and we trade this together every day, 8 o'clock Eastern time. I can't think of any better way to come out and learn this stuff and start making consistent results than to do with me tomorrow morning in our trade room. I have a ton of people with us just crushing it right now in our morning room. It's the best part of my job. What a fantastic week, fantastic day it's been. I will leave all the important links, the free class links, the membership trade room links, my Twitter feed in the description down bottom there. Any questions at all, don't be afraid to call or use live chat, especially if you have any trouble getting access to our free video classes. Just email, use Skype, use live chat, or call us anytime. We're always here. All right, guys? Fantastic week. Great job today. Don't spend all that money in one place this weekend. But again, we're not done yet. Tomorrow morning in the trade room. Hopefully I'll see you there. If not, we'll come back next week and we'll do it all again next week, next Monday evening on the next edition of our video newsletter. Guys, thanks for being here. Thanks for watching all the way to the end. You are the person I do these videos for. So thank you so much for your commitment and dedication. Now get out of here. Enjoy the rest of your evening. Hopefully I'll see you sometime soon in the morning trade room. In the meantime, be well, be nice to each other out there, and be here next time. Adios, amigos. Bye-bye for now.